following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. It's Tuesday morning. We're going to take a look at the 10-year immediately. And here's that area that, John out of Philadelphia and I were looking at the other day around that 128.31 to 129. And we talked about passing on the shorts just because of the general action of the 10-year and the 30-year over the last couple of years. And that selling point right there that we opted out on, it was a target-rich environment for longs after we had crossed the border and got above some weekly and daily inflection points that we needed to see that border crossed. We've actually come down and met the DMZ down here, 128.04 down into 127.24.27. We're trading a little bit below there right now. The market obviously is making, another run. And I want to reference that before we finish the conversation about the 10-year, just to kind of give a heads up on what's going on with these S&Ps and U.S. Treasuries. Here's the situation on the daily on the S&Ps. Obviously had a little bit of a reversal since yesterday morning, since we talked. Still see some cracks in the armor on the Brett situation on the S&Ps. We'll go over that in a little bit. But as we look at this and in reference to the 10-year, I mean, you really, in my opinion, still need to kind of, take a step back, look at what's going on here. Markets basically at all-time highs in the 10-year and the 30-year on a relative sense, basically just coming off of, recent highs on this. We've ticked up. I don't need to go over this. I know you guys probably are aware of this. We've kind of started ticking above 2% on the 10-year, and here's the weekly on the 10-year. So starting to gravitate back down below some major areas. And that means that, it might be time to opt out till we get back above the border again that we've been utilizing. Because we've had some decent, pops here. Obviously, we've had some decent breakouts in the past. So right now, it's kind of a sit on your hands for me on the long side. I know some people out there are wanting to start getting in the water on shorting treasuries. I'm still not a big fan of doing that yet. Got a lot of things to consider, whether they're right things to consider or not, as far as the global interest rate scene, which at some point we'll start seeing a disconnect on that. But right now, to sum that up on the treasuries, just kind of a sit tight on the 10-year. Taking a look at the 30-year, I'll pull that up. A little bit less precarious situation. There's the 30-year. There's the inflection point, 144.08. Not even getting remotely near there again. So let's just look at the 10-year again on the long term. This is looking relatively weaker, but let's take a look at the 30-year. We're just getting back down into, this unfair high on the daily and actually still well above that 144.08. So right now, getting back above on the 30-year, 144.28, 146 general neighborhood. That's what I'm looking for. And right now, we're just kind of sitting tight until that happens, if it happens. Excuse me. Let's take a look at, gold. Yesterday, we were kind of talking about this wasn't really looking that longish anymore. We're going to have a close above 120 toward 12.22 on the April contract. And now we're just kind of drifting down. And we talked about just laying low on this thing. Not a big fan of shorting it. Not a big fan of going long right now. That's the sum of that conversation. We're going to take a look at the, we're going to go back to the S&Ps and talk about this a little bit more defined here. And let's pull this thing into play. And here we go. So here's the situation on the stocks, the internals of the S&P. I think yesterday we were looking at 90.92 for stocks trading below profiles. These are our statistics based on looking at every single stock in the S&P, looking at it as a summation equation. Don't see a lot of new boxes attempting to appear here, but starting to see the inside area starting to fill up here. 206, stocks trading below 85. Still got 209 trading above. The weeklies, which are our most powerful situation that we can get our hands on, still extremely bullish on the very long term. But what does this all mean? This means that, we started seeing some cracks in the armor. We're starting to see the daily a little, starting to show some weakness. And we talked about possibly just sitting tight based on that on the longs and waiting for some pullbacks, 2084. That's still the case, in my opinion. Remember, when things on their highs go higher, things on their lows go lower. So you got to keep that in mind as we kind of pinch up into this area. Excuse me. As we pinch up into this area, we're looking at this as more of kind of, long-term trend is up, breadth still positive. Let's find some support areas a little bit lower to buy. And we've also got some resistance areas up here, but that actually coincides with, all-time highs on the S&P. So again, that's not a good game to play. I mean, there's a million people in the world that see that same thing, and our inflection point happens to line up coincidentally with that area. So this is something. I'm not a huge fan of getting short in a big way this product right now, not yet. We'd have to wait for closes above 2117 and look at the breadth situation as that happens, if it happens, to consider going long this thing again. I'm just not a big fan of going long this right now. Let's take a look at the NASDAQ. A little bit different animal. We've talked about that. This is kind of a runaway train, and there's nothing really telling us that anything's going to change with that. I want to go back to the S&Ps and give some short-term numbers. These are our 240s. Again, I think, we can just kind of move around here, gyrate around, and those 240s are somewhat meaningless to me right now because, there's going to be some herky-jerky trading with this product until we get some more clear definitions of what's going on. Here's the, just pull up the DAX. I can't find it. Again, this is something, it's okay to be long, not okay to be short. In summary, I was taking a look at some different sites this morning, and one of the things I was noticing was that Alibaba got restricted from, this is kind of weird, Alibaba got restricted from doing business in Taiwan. Taiwan's a very progressive place. If you've ever been there, you know what I'm talking about, especially in the last 10 years. In the old days, it was pretty much a manufacturing center, but Taiwan is one of the most green, friendly, progressive, boutique restaurants and bars everywhere in Taipei now. It's kind of like the supermodel capital of Asia too, by the way. If you ever want to explore that scene, it's a neat place, and for them to do that is kind of amazing to read that. It's not a mainland China type, hey, we don't want to let anybody into the culture. It's kind of shocking to me to hear that, but I don't think it's going to be a huge hit on Alibaba, but we're going to go into that and look at it really quick. As they pull up Baba. Trading down to 84 right now. And as you can see, this thing, I mean, even without the news from Taiwan, has been breaking profiles using resistance, and on a relative strength scale, now we're sitting down very close to one of these areas where a lot of people have their stops now. You might be able to take advantage of that, but I don't know exactly if the float is available to short this. That's gonna be something you're gonna have to discuss with your broker. A lot of times you can't get these borrowed. somebody finds out about that, I'd love to know. Here's the Shanghai. We talked about this yesterday, the rate cut. China, here we go. Still, in my opinion, a decent long. 32.29 is support on that. Here's the 240 starting to break there. And yesterday we were kind of reaching for the skies, or actually made an intraday high after we talked, and then we kind of started selling off today in overnight trading. 32.29 support on the Shanghai. Euro, not a lot to discuss there. Same story. Drifting lower. We haven't looked at the Aussie dollar in a while. We're going to take a look at this really quick just to give some numbers. Still the gift that keeps on giving, just like the euro, I think is looking for another reason to go down. Here's the inflection point to pay attention to, 78.61, 77.74. A little bitty short, thin profile here usually means we're going to break out one way or the other pretty violently. When that happens, be looking at that outside of those inflection points. I'm biased towards the short side on that product. Okay. We're going to take a look at Walmart because we're down here right in the inflection point area, 83.48. And we had been kind of living in the relative strength downside camp on this particular stock. But remember that weekly takes precedence over daily. So right now, any closes below this 83.50, especially with the market on all-time highs, you're going to have to pay attention to that. And that may be breaking some barriers on the downside on this stock. We use those dailies to leverage that on the short side, using the scanner to pick that out. So that's the story on Walmart. We're going to stick by that. Let's take a look at the yen. Had a little bit of a cross the border and retest to move higher. Now we're coming back. I think this is still a great situation. Stops below 119.44 on this, and that's going to be the kind of the Maginot line for that particular instrument. Okay, when we come back from the break, and by the way, the numbers to call are, TFNN has been coaching me how to say these numbers, 877-927-6648, and internationally 727-445-1044. Got any questions, comments, anything to be looked at? Give me a call. Come back, go take a look at some stocks I got on the radar screen. Be right back, folks.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. I guess Google's going to definitely move forward with their mobile phone situation. Just wanted to kind of point out what's going on with this thing and the technicals, the levels, if you will. 553 unfair highs on the daily, 560 on the weekly. So both of those borders have been crossed last week, and it seems like we're not looking back. And this is really good technical news for Google. This is Google, GOOGL on this right now. We're going to take a look at something John wanted to look at, which is, get this right, November. Well, that's not the right symbol. We're going to pull this up. We're going to look at November 2005 beans. And here we go. Excuse me. Well, this is the weekly situation. We had a close last week above that was very, very promising. And actually, you know, I have been in the short run on the near-term contracts on beans, kind of bearish, actually. And, you know, I think my judgment's a little swayed as far as technicals go, just bleeding in some fundamentals. And, you know, these guys down at the elevator, when I say these guys, they run a very large operation. One of the outfits actually owns Butterball Turkey. They feed a ton of, you know, turkeys, chickens, pigs, probably goats. It's kind of big around here now, but I've been letting that sway my judgment just a tad. And, you know, as we started selling off on the, this is the May beans, but the March beans, when they started selling off around the 1050, 1060 area, that was a nice trade. We did find support down here on some inflection points on those March beans. This is November I'm showing you now. This is obviously a whole new different ball game though. And this is a great question because it kind of brings home the concept that, May and March beans don't have a lot to do with new crop November beans. In some form of arbitrageable manner, they do. But if you think of farmers, and a lot of these places are going to hang on to, old crop beans, or you know what I'm trying to say? There's a huge disconnect there. So these new crop beans, which are November, a lot of things can happen between now and November. That would obviously impact current inventories and prices. But this is going to be the November beans is all. If you guys don't trade grains, this is always the one that is more weather related, is more a lot of impending things that as far as news reports can impact this particular product. If I could ever speak this morning, I'd be happy. Let's see. So the major inflection point around 990 on these November beans, and we're kind of getting back down below there, and that means that on a long-term basis, we're back in the balanced area. And on the daily, the reason I'm kind of going through that is because daily we've got a new profile that's appeared here. So, what do you do with this thing on an intermediate basis? And I think somebody's looking at this from the long side. 975 is going to be something that can be, chosen as a battle point for this from the long side, and that would be taken into consideration that, we've closed above, we're coming back into the long term, we're in the balanced areas. It doesn't mean that, all bets are off on the long side. It just means that we're going to, we're not clean and clear of some situations that we need to get clean and clear of. So my take on this is 975 is going to be a place that you could start accumulating, put stops down below, take a look at how that little situation works out, make sure you use your stops, and then get back in the game back above 975. I mean, the technical damage really, has started to happen on this again to the long side against the shorts. Again, I've been kind of bearish on this, listening to this guys yap a little bit all the time. And they've been, they have patiently waited to, they are totally working from the buy side. So they don't short grains. It's not even in play. They wait for situations during the month to actually accumulate grains and store them, or to place orders at a certain price and let somebody else store them. So their temperament is still about the same. We'll be back and cover wheat in just a little bit, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. We're kind of finishing up with beans here. I think we did kind of cover that, so we're going to take a look really quick at July wheat. Put that up. K5, here we go. Just to finish this up. And by the way, you know, soybean meal is the big deal about feed as far as, you know, there's corn, wheat, and soybean meal. That's kind of the three alternatives there when it comes to feeding animals and the supply for situations like that. 543 is the big number on July wheat that we, you know, knew ahead of time and have stayed below. This is more the, you know, the product along with corn that these guys basically focus on down there. You know, when corn starts getting too expensive, wheat starts coming into play. There's some protein differences and all that. I mean, there's an equation that's not an unknown that's been pretty figured out as far as how they're going to rebalance things when it comes to feeding all these animals. So 543.5 is the that was the selling point there. And, you know, what do you do now? So is it time to start accumulating? Yeah, you've kind of crossed the border, gone back above, retested it. I think this is a pretty high risk reward scenario. If you're looking at it from the long side, you've got basically $5 a bushel, which is, again, a psychological number for a lot of guys that are trading. I think we're trading 503 pre-market. Is that where we're at? 501, something like that, 503. But here's the stop-oriented situation below $5 a bushel based on your appetite for risk. I might even put stops below all-time lows here. But this is kind of good news for wheat. I like this action here. Going back and retest. It's not the greatest thing in the world that it reversed that hard yesterday, in fact, but $5 is pretty cheap for wheat. I'll say that. I know what it takes to get it in and out of the ground. Sounds good. Sounds good. Yeah. I think the risky trade here is to get short in a big way. I mean, I know things go long. Things on their lows go lower, but that's pretty cheap for wheat. And a lot of people, to be honest with you, a lot of people have looked at the corn situation. Wheat and obviously corn and wheat have a big relationship, but a lot of people are shifting into beans and wheat out of corn. I mean, these farmers are always, unfortunately, they're always a year late. I mean, they kind of look at what happened in the current or the past year, and then they just kind of switch gears to where, okay, I didn't make as much money on corn as I wanted to, and I'm not going to really look at the larger situation. They just switch into what the latest greatest profit center is, and then unfortunately for them, everybody switches at the same time, and everybody's thinking the same things, and they almost kind of kill themselves without probing around too much. Let me see this. Wow. Well, says there's a gold heist on I-95 right outside where I'm at right now. 4.8 million. I haven't even read that on the news. Let me see if we can find that. Just got that handed to me. Huh. Armored truck robbed of millions in gold along North Carolina interstate. That's obviously not affecting the gold market. Interesting. Wow. Didn't think that happened anymore. Okay. All right. Let's go look at this. This has been something near and dear to my heart. The XLF. Yeah, I I hear you. Italian job. First I've heard of that. That was weird. It's right in my back door here. Of course, I don't read the local newspaper. Let's see here. 2451. I'm standing by this, guys. This XLF situation, I know they want bonds and notes to kind of gradually, they want the disconnect to happen. They want the yield curve to widen out. Even though we're sitting right at the border up here, I still think this is a stop-oriented short. And you got to give this thing a little noise up here, but I still like this from the short side. XLE kind of had some technical damage on the medium term here. Yesterday, we're going to have to look at oil just a bit. Let's take a look at that really quick. April contract. I still like this from the long side, and I like the XLE from the long side, and I like getting back above that 78 number on the XLE. So I don't think you should be able to call it quits on crude oil yet. I think the bias is toward the upside still in this particular product. As many people out there are saying it's going to go lower. I actually think the XLE and a couple other things are, you got a balance point here to pay attention to, obviously around 50. So give yourself a little room on that one. And all-time stops have to be below 46 on that. All right, let's move on. I was reading something about Bill Gross. Says he's got up to 4 years to reestablish his mark at Janus Capital. This was something else. It's like reestablish his mark at Janus Capital. Will keep trading to prove he can still beat the market. This guy actually was underperforming the heck out of the market for a good while there. I don't know what he's talking about, actually. Okay. Trying to get things adjusted here. So apologize, guys. Let me actually pull something up. And here we go. Get this resized. All right. So as we look at this, I hope everybody can see this now. As we look at this, let's just take a look at the Shanghai in particular. All right. Now, as that thing is pulling back, I'm still looking at our breadth information and trying to find support on the Shanghai based on the tide of the marketplace being as it is. Now, the S&Ps, we talked about this a little bit. We saw some cracks in the armor yesterday. We're still in the middle of a balanced area on the dailies. And you know exactly where those inflection points are because we've been talking about them. But until we start seeing these things roll over, there's no reason to get big short in a big way. We talked about that September, you know, when that happened in September, middle of September 15th, 19th in there, we had these actually go negative as the market was actually creeping up, and that really kind of proved that disconnect was there. Something was wrong, and we needed to try to, you know, pick a battle based around those anomalies going on. But what I'm going to do now is kill that. I'm going to come in here and we're going to talk about some immediate situations that might be attractive as we wait for the S&P 500 to come up. And we're going to look at daily. We're not going to look at below the box. We're just going to look at bottom. Okay, and what that's going to do is that's going to tell us, you know, what stocks were really residing at inflection points. And as you can see, these stocks which are gray are not even in the calculations for below the box. They're just sitting right there at the precipice. So what we want to do here is take a look at some of them, and I'm going to preferably look at some of these, like Ralph Lauren, RL. I think we talked about that yesterday, or maybe that was on Tom's show yesterday afternoon. MBR, Neighbors Industries. Let's take a look at MBR really quick. Or actually, let's opt out on that. I'm pretty sure we covered that yesterday afternoon, but maybe you guys weren't listening then. I don't know. Let's take a look at IBM. So we've got a top and a bottom here, but let's just kind of pull that up on the charts. IBM. Okay, so let me go back to the weekly here. Okay, so what had happened recently, as you know, we're coming back into weekly unfair highs on IBM about 160.5, and we talked about trying to leverage some shorts off of this the other day, 163.09. So now we're back down into this inflection point, which is a new profile as of yesterday, with unfair lows about the same space as the weekly unfair highs. And, you know, considering that the market is kind of in the S&Ps, I know the NASDAQ's wanting to reach for zillion point highs, but considering the S&Ps are where they are, and we've got an inflection point here lining up on two different time frames, namely the weekly and the daily, there's that 160.50, excuse me, 160.55, that's coupled now with 160.26. We've met our targets coming off of this 163 area, so we've made about 3 points in this already coming back off of there. Right now, I think it's time to sit tight, even though you've got these inflection points sitting here. I don't know if the leverage yet is to get short this again. So we need to see a daily close, and this will be very important to get back down below 160.5, 160.26. So you got about a 25-point DMZ there. The market may continue to move higher right now. It may drag this up. So we're just going to have to wait and see and hope that we get a close below that 160.5 general area. We're trading, looks like 160.78 pre-market. So is this a buy? I'm not a big fan of going long IBM, so I think we need to pass on these pullbacks into support areas. That's kind of been my take on it. The stock could fall apart again. There's news stories that are going to continue to come out about this stock. the bad news is for shorting this is there are a lot of people thinking the same thing. You got to take that in consideration. Trying to catch up on the reading here. Okay, so as we go back into the scanner, I'll pick out something else on the radar screen. Let's just take a look at Delta Airlines, DAL. And as I pull this up, I'm going to kind of give the landscape view here. This is where we're at, right in the vicinity. It tells you bottom when we're kind of in a percentage range of that particular bottom. So I'm going to pull up Delta Airlines. Here's the situation on Delta Airlines. We've come down to support. It's been a relatively strong stock. That past couple of weeks, not as strong as the market, obviously, but we're within a balanced area. Don't see a lot of cracks in the armor here on the long-term weekly and the daily. I'm just going to consider this noise. So the long situation on Delta, if we can get back above 45.41, you can orient stops down below. There's another thing happening here. Delta seems to be kind of coming into a point on our navigator down below, and that means anything can happen. So make sure you put your stops in, and all-time stops need to be below 43.63. And these numbers are, there's that 43.63 as I mouse over. So, this is providing support and resistance areas and kind of telling you, what's cooperating and not cooperating with the market in general. And that's on a kind of a relative strength trading basis. Let's take a look at Kraft Foods. We looked at this the other day. I just want to do a little follow-up because it's sitting on the bottom here. And as I mouse over, that means we're in the vicinity of 63.82. So let's take a look at that. And here we go. This was something, well, let me just pull up our weekly here. I like this stock. I like this area that it's come down into. I don't like that it hasn't, gravitated away from this area. But to me, when I say I like this stock, I like it fundamentally in general. But to me right now, it's looking for a reason to go down and try to start making a run for that 61.39 area. All right. So I'm seeing this as we're getting down into inflection points. The market's been kind of edging a little bit higher. The Nasdaq's, obviously doing what it's doing, and this thing's not wanting to get away from this consolidation area that it's come down to. And that actually, to me, doesn't mean that it wants to be away from these inflection points. It means it probably wants to pierce it, have a close below, and then, head a little bit lower. And you're looking at our navigator here. We have crossed the zero line, and this is kind of a gradual rollover here, which is gaining momentum as this thing consolidates. So Kraft is something that we're going to have to pay attention to, come back to, and I'm looking at this from the short side. We'll be right back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi, guys. Welcome back to the show. I think we've got a caller. Randall, are you there?
Yes, I am.
How are you today?
Really good,
Great.
John.
Great.
Hey, real quick, I hate to interrupt the flow of the show here, but could you go back and look at the 30-year bond again, really quick?
Yeah.
And I don't know if you can pull up the June contract or not, but the reason is that all the liquidity now is in June, and my question here is, can I assume that the that bottom of the box would probably be roughly in the same orientation as it would be on the H contract, meaning that there should be good support right around 59.19, I think it is, or 58.19.
Yeah, it's a great question. Let me pull that up.
Because we're headed right there right now. We're real close to that. So that would be a major swing point. And I'm assuming there's going to be a lot of support there, but we'll see.
Yeah, this June contract's obviously it's a little bit different than what, I mean, obviously they're looking farther out. I don't know if, was it you that sent me an email directly? I think I was trying to figure that out. I had my partner do a little bit of research on this about the June versus the March contract. Was that you?
You know, it might have been. I was trying to find some information about that a few weeks ago, just because it was so confusing. But
yeah, I mean, it's a little. You know, this is a little bit of a forecasting situation, and there is going to be a little bit of a disconnect with away from normality between these contracts. But to answer your question really quick, we've got a fence here around 159.10 on the June contract, and should you pick a battle here, I really, I'm not a big fan of shorting either one of these products, the 10-year or the 30-year. Still, I think you've got an inflection point here you can pay attention to with stops down below based on the noise. But remember, a lot of times, when we get near lows, stops will, these guys will just drive into stops. Yes, push it through. Exactly. That's a great term. So be aware of that. But again, we've got a situation that, again, we've got a place we can pick a battle. I don't know, you might want to just sit tight and wait a little bit here. This was a pretty big move yesterday. And, there may be some follow through. So it might be better suited to just kind of sit tight. And if we can get back on some kind of, reaction and get back above 159 later, maybe that might be the better trade.
Okay.
Just from a kind of action trading standpoint,
Yeah, right. My main question was basically the technical one, whether or not that pivot point there would be about the same, and it looks like it is. So,
yeah.
Okay. Well, hey, great.
Yeah,
Great,
thanks for calling. I was supposed to have Eddie was supposed to call from Moscow. He's here today, but they're blocking TFNN again from Russia. So I appreciate the call. He's sitting in an office right now, and for some reason, Putin has got everything in a headlock over there, I guess.
Yeah, that's amazing. Hey, another really quick question is on the scanner. I emailed you. This is a few weeks ago about getting like the what do you call it? Those charts off the scanner where you go to the members area, and I can't get into that because what they do is they require some sort of password, and I never got the password.
Okay.
Is that still available or?
Yeah. You mean this over here? If you're watching the screen, those things. Yeah, that should be available to everybody on TFNN.
Okay, yeah. For some reason,
can you send me an email and we'll get that straightened out?
I certainly will, John. Thank you.
Great, Randall. Thanks for calling in, guys. You've been great today. Gotta love Putin. We'll be back again tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.